All right, so let's talk here, right? Interesting, kind of what we were talking about the last couple of weeks, definitely last week. Hold on, I think this signal just went out here. Okay, so what we were discussing last week for sure, and probably the week prior to that, a couple of things we're seeing unfold here, and we've been kind of in a tricky spot. So let's rewind quickly to just get to where we are today and what we've been discussing, and then we'll go forward, right? And the things we need to keep an eye on here. Obviously, we got a big jobs number tomorrow. Today, they kind of front ran off the ADP data. You know, again, I don't know. I'm no economist. It's going to probably need to be a real hot number for for additional selling to stick, I presume, but I could be dead wrong on that. But you know, it kind of looked like they were front running an unfavorable number tomorrow morning. All right, so that's at 8:30. More than likely going to be market moving regardless. It's all about the job number right now, and we'll get into that. But primarily, as far as economic data right now, all eyes are on jobs because everything else, little by little, is starting to show cracks. So, you know, that's good and bad. Again, we'll discuss that. But let's talk market, and then we'll save that stuff for after that. Okay? We've been discussing recently that this bear market rally, okay, or whatever you want to call it, squeeze, basically leveled out a lot of bearish positioning, short positioning, right? As we mentioned back here, you know, this was quite a nice setup for at least some sort of low, because you had everybody, especially on the professional side, aggressively short into these lows. Okay, so again, what I mean by that, you had systematic funds and CTAs, you had hedge funds, you had specs in the futures market, you kind of had everything. All right, so this rally did its job, squeezed all of them to the point where some of them flipped slightly long, but most of them got to a more neutral stance here. Okay, and that's usually in a bear market where you usually top out. Sometimes the stronger bear market rallies that last for a longer period of time can go on longer. Okay, they can get shorts to eventually flip long. But, you know, again, if you've been coming to these webinars, especially in the bull market prior to this bear cycle, we would wait until all these bears got aggressively long before this would play out, right? That cycle to play out. In a bear market, it's different, okay? And think of it as that these people caught all sides here on the short side as fuel for a bear market rally, okay? Without that fuel, you get a lot of these flash in the pan, 1 day, 2 day squeezes that can't find any follow through, okay? Because it makes sense. When you're in a bear market, it wears out everybody, okay? And it's hard to find new buyers, especially as the macro backdrop continues to deteriorate, right? Especially as the noise continues to get more depressing. Buyers are just non-existent, and you hear a lot of that, right? Liquidity is really low, a lack of buyer strike out there. So you need that fuel to see these type of rallies, okay? And as we get through this, especially if this is your first bear market, you'll know for future bear markets that that's what you want to sort of key on the for long side exposure. You want to be a part of this, right? Anything away from that's just too difficult if you're looking to play the market and high beta names that are highly correlated to the market. It's just too difficult because you may be up on a name for an hour or two, or maybe even a day. You close your eyes and blink and it's gone and it disappears quickly. Okay, and you guys see how this market, I mean, look at what's going on here, right? This market feels like, especially on an intraday time frame, that it's volatile moving around. But in a sense, since December 19th, I think that's this, yeah, December 19th. We haven't gone anywhere, literally anywhere. Okay, so you can see how that can be frustrating for anybody who's trying to play either side at the index level. Okay, and that's why, if you remember, the playbook for this, when you're expecting something like this type of price action, this type of climate, if you remember what we discussed, is to focus on opportunities in individual names, right? On both the long and the short side, okay? Because you're going to have names outperform and underperform as the market does just some sideways chop. Okay, so that's why the playbook calls for focusing on individual names when you're kind of expecting at best something like this. Okay, and this is kind of where we're at right now, and I like to call it no man's land, right? That's how we were referring to it the last couple of weeks, because you now have all these bears who were shaken out of their short position, okay? As the market shows some weakness, now they start to put that bearish exposure back on, right? Because think about it from a bearish perspective, right? Big picture, you're bearish on the market, you're bearish on the macro, the economy, you just flat out bearish. And you want to make the money on the short side in this cycle, okay? You're going to look to avoid sitting through this as much as you possibly can, or hedge, right, while this occurs. And then when it runs its course, if you have that bias, you want to put that exposure back on, right? Because you don't want another break to new lows to go on without you, okay? So we are in that process now where all these guys that got squeezed, little by little, they already have started the process in certain spots, putting that short exposure back on. Okay, so that's what no man's land. That's what I refer to no man's land as. Okay, you don't have anybody offside here, and it's hard to find any traction in either direction unless you get a strong enough catalyst. And what happens usually in a bear market, most catalysts are what? Bearish, right? You get bearish news or something similar to what the Fed minutes and tomorrow maybe the job number, whatever it may be, where all these bears that got squeezed out start to get aggressive on the short side again. Okay, it likely will weigh on price action. Okay, it should weigh on price action. It's definitely going to weigh on any upside possibility, right? Okay, more than likely it weighs on the price action until you get to a point where all these outfits are short again, and now you're looking for a catalyst that not even as good, but not as bad as expected to light the fuse and get this going again, right? So again, nothing is as simple as me drawing on a chart, right? Charts are so deceiving. They mislead us all the time. They make it look so easy, right? You look at like the 2000 bear market and you look at it on the chart and you're like, oh, I could sit through that. I could get through that, no problem. But meanwhile, in real time, sitting through that bear market for 3 years is absolute torture. You know what I mean? So you guys know it's really deceiving. But the main goal, okay, especially for us, if you're a newer trader, or for most of us who are primarily long side players, right? What we want to do is avoid this and try to make some money in this, right? Avoid this and make some money in this. Avoid this and try to make some money in this. And again, I'm not saying we need to be Houdini and time these things perfectly to the tick at the low to make money. As you guys know, all you need. No, no. Oh, I thought it knocked it off. My bad. I thought I lost you guys. I'm back. I had a signal issue. Okay, but I give an example, right? Let's take some of this this recent one here. Okay, you had this, right, and then you had like you didn't have a bear market rally, but a pretty powerful squeeze here. Okay, before you got that better setup down here. You understand? Similar here. You had a little downdraft, okay, where tactical players were leaning too aggressively on the short side. You get a 1, 2, 3 day squeeze and then rolls over. And then this is that better setup. So the problem is they don't go up and down in a straight line. Okay. You got to actually be patient, and you don't have to wait, meaning it's sit in cash and do nothing through these little mini squeezes, but you got to understand that the likelihood is these squeezes are going to be short-lived because you don't have that offside positioning you need for sustained upside. Okay, and that's exactly where we're at right now. Exactly where we're at. Okay, we can very easily off a job number that's not as bad as expected, right? We sold off today. Everybody's looking for a hot number tomorrow. It's not as bad. Very easily, you can see a snapback move that lasts a day or 2 or 3, right? But that's not the setup we're looking for, right? It's not there yet. So what we would be looking for is that rally to run its course, and then either through chop or more downside action, can finish the setup to where we get that offside position. Okay. So the way, and that's the luxury we have now that we didn't have early on here. Okay. Early on here, you couldn't do a thing. You had to wait for that setup where that offside bearish positioning took place. And that was the only opportunity you had to play anything. Why? Because everything was so highly correlated to the indexes. Okay, so in other words, if you played a name here, okay, let's say you played, I don't know, China play, a gold miner, Boeing, anything, okay? If you played it here and the market still needed to go lower, okay, whatever name you were in went lower with it, right? That's what we've seen literally for 3/4 of this bear market. And that's usually how the first, at least first half of the bear market plays out, that high correlation. Okay, what we've been seeing recently is something a lot different, right? We're seeing names that, again, look at the market today, right? The market took a shit, excuse my French. I can give you 15 Chinese stocks that ripped, right? Or, you know, a couple of days ago, market was down. I can give you value names, cyclical names, China plays, gold miners that ripped while the market went in the other direction. So we're seeing a lot more than that. We're seeing a lot more of that of recent, because that's what usually happens at this point where we are in this bear market. Okay, you see a lot of names diverge from the indices. Okay, but I want to again stress, even with the outperformance we're seeing in names, okay, everything evolves around this setup. And what I mean by that, all the nice winners, okay, that we've seen, every single one of them, gold miners, China names, whatever, value names, the best entry on all that stuff was here. You understand? This was the sweet spot entry on all that stuff. Okay. Now you're probably saying, well, of course, it was the sweet spot entry on everything. No, you're wrong if you're thinking that, right? Because if you bought Microsoft, you got buried, right? If you bought Tesla, you got buried. You understand? So the names under the hood, right, that see the sweeper activity into the downdraft, into the weakness, and show some constructive price action, hold up better into the weakness, those are the names that are likely going to outperform into these rallies. Maybe not initially, but over the course of the whole, right? First, like initially, sometimes you see everything squeezed the first couple of days or the first week, okay? Then you start to see a lot of the out of favor stuff get tired, and that's where you see the outperformance. All right. So even though we're focusing on names here, right? I throw out that overused keyword that you guys probably hate every time I say it throughout this bear market. You still want to be extremely tactical, even in individual names, right? You don't want to get greedy. You want to play in the middle of the momentum, take the money and run. You're fortunate enough that you got something to make some money in while the market does this, right? That's the approach you want to take until we get this set up, okay? Then you can get a little more aggressive. You can get a little more greedy because, again, you have the fuel, you have the ammo to see that potential follow through, more upside. Make sense? Right? Tactical meaning nimble. Correct. Correct. Exactly. Okay. So on that note, exactly, want to see order flow being discussed in real time. I'm on a live broadcast during market hours every day where I call out the most actionable orders and point out important sentiment and positioning updates throughout the day. Go to wallstreetjesus.com/the Steamroom to apply for a 30-day trial and check out our community of traders. Make sure I had all these pictures set up so I'm not searching with this horrible Twitter search and driving you guys nuts. Okay, so here is everything I just mentioned. Basically, here it is in pictures, right? Again, if you members, we look at this stuff and nauseum. But for those of you who aren't, to get an idea, hedge funds, okay? And this is not David Tepper, it's not Ackman, it's overall hedge fund exposure as a whole, okay? Here is that set up into the lows. Here, they were the most short they've been in this bear market. Look at that line, okay? In this bear market, okay? As you can see, the bear market rally, they got squeezed hard to the point where they're overall slightly long right now, okay? They're probably short some tech, long some cyclical, whatever mixture it may be. But overall, they are flat, let's call it, okay? So what we want to see, the next few updates, we want to see what happened here, what happened here take place, right? That's what we want to see, okay? To get to that setup and to provide the ammo and fuel that we need in a bear market to have confidence we can see some sort of sustained rally, okay? So that's hedge funds. What's this now? Oh, these are credit default swaps that we were looking at, right? Then, for those of you who may be new, mirror image of the price action in this bear market, right? As this CDX credit default swaps index moves higher, the S&P 500 moves lower, okay, and vice versa, okay? What's important here, what we discussed the last couple of weeks, this is where Powell and Kashkari threw a shit fit that the market had rallied and eased financial conditions too much for their liking, okay? They need this to do this to defeat inflation. That's the way they're looking at it. The Fed wants this to continue this uptrend, okay, or to stay elevated to defeat inflation, okay? Because of this rally in risk assets, we are back near the level where the Fed was unhappy with the easing that's taking place, right? It kind of undoes, that's not even a word, it'll undo their work, right? So of course they're angry, okay? So now what we're looking for here is for this thing to start to creep higher again. You see what's happening already, right? The Fed minutes yesterday, you hear a couple of Fed members run their mouths today. Kashkari talking about, I don't know what terminal rate, 550 he throwing out there. You know what I mean? Sounding uber hawkish. They're trying to get this moving higher again. Okay, what that will mean is more than likely the S&P will have to move lower. Okay, as it weighs on equities and risk assets. Okay, can it go a little bit lower? Of course it can. Okay, this is no magic brick wall here. All right, but what's unlikely to happen is what usually happens at the end of bear markets, and that's when the Fed cuts rates. This rolls over, which means this. Okay, the Fed is not going to allow this to happen. All right, so it's very low probability of that happening. Okay, so think of it as a stock that is basically at major resistance and can't break through, right? And will likely see some selling or major support, whichever way you want to look at it. Yeah, well, interesting you say treasury yields, because a lot of people are calling a top in yields, but the one that we should follow, T, the one I follow, you see me post a lot, is the 2-year, right? And look, exactly, and look, okay. So you see, after coming a little flag here, starting to head higher again here, right? As the Fed has been hawkish. Right? So it's already playing out a little bit. Yeah, a good call. David Tepper is saying, listen, until I see something different, why am I gonna just assume that the Fed doesn't mean what they say, right? I need to see something different. I need to see the unemployment rate tick higher. I need something that tells me that the Fed is going to stop and pivot the other way. Otherwise, I'm going to listen to what they're telling me they're going to do. And that's what's been going on this whole bear market, right? The Fed has been telling the market, listen, we got to keep it tight and we got to continue to tighten. And I don't blame the market for not believing the Fed, because the Fed's been dead wrong so many times, right? The Fed has been dead wrong. But here's the problem, okay? If you don't see the evidence of the Fed being wrong, it's going to cost you money. You understand? So that's why you see the market, it doesn't believe the Fed, and then as soon as there's some evidence that the Fed looks correct, you see the market sell off, right? And that's how the market's playing it, because this market is more concerned about missing the upside than any downside. You understand? And until that changes, like we discussed throughout this whole bear market, we're likely nowhere near a bottom, right? Or we're likely, I should rephrase it, we're likely nowhere near the start of a new bull market until that changes, okay? Everybody's waiting on the Fed, and they're trying to front run Fed rate cuts, which rarely works out that way, okay? So good call, T, on the yields as well. Here's the systematic funds, okay? CTAs, vol control funds, the whole 9 yards. In a bull market, guys, a lot of this stuff, I'll be the first to tell you, you should know where it's at, but you don't need to follow it as much as you do in a bear market. In a bull market, this stuff can get in the way of you making money, okay? When the Fed's rigging the game to the upside, you don't want to pay attention to much. You understand? Just the opposite of what's going on now, okay? So, but in a bear market, this stuff is important. You have low volume, light liquidity, retail getting washed out, okay? There's not too many players active in the market right now. These systematic funds, these algos, they move markets, right? Every squeeze, in my opinion, okay, and this is my opinion. Obviously, I don't have the facts to back it up. I'm too lazy to even dig them up. But my opinion, CTAs, I think, are the start of every bear market rally we've had. When you see that chasing behavior, right, where the market does this, that's not human beings, okay? Human beings don't like to buy up like this. Those are CTAs, where there's no emotion involved. They're not thinking. They're extremely short here, And every tick the market goes higher, they have to add exposure, add exposure, add exposure, add exposure, right? And then the opposite. Here, they're flat. As the market ticks lower and the VIX ticks higher, add shorts, add shorts, add shorts, add shorts, add shorts. That's what they do. In a low liquidity environment, they move markets. Right? Or I should say you can see their footprints. So this is from Goldman, right? Again, you got McElliott has a CTA. Everybody has a CTA model these days. Okay, that's how important it is. Okay, this is Goldman's. And what you could see here, this was this morning. Okay, they give you an idea of how CTAs are going to position as of right now, depending on the tape. Okay, let me move this out of this is in my way. I can't even see this. How do I get this out of here? Hold on. Oh, hold on. There we go. All right. So you see this? Flat tape, sell 700 million worth of the S&P. Okay. When you get to that sweet spot low that I was pointing out, where funds are all sides, right? They have too much short exposure. What you will see in a flat tape, you'll see that they need to add exposure because they're already short. Okay, so you will see the opposite of this. So in other words, in simple English, for those of you who maybe don't understand the lingo, if the market does nothing like it's doing right now, okay, not going anywhere, they need to be sellers of the S&P 500 of 700 million. All right. So again, that's added supply, right? When they're buyers, that helps create a bid in the market. Okay. This type of positioning here, okay, what happens is when the market starts to sell off, okay, if you see the market start to roll over from here, if you see the indices start to roll over from here, okay, that's where you get that continuation where CTAs have to add that short exposure back on. You understand? And that's why here, when you get to these levels and the market has trouble, right? You'll get bad news and the market will go down, but then snap back up, right? You'll get negative news, the market goes down, but just can't find any follow through. A lot of times that's because everybody, all that I'm showing you here is already short. And even if the market goes lower, they're not adding shorts, they're covering shorts. You understand? All right. So where we are now, a lot of these outfits are just starting to put short exposure back on here. All right. Now, everybody has a different model. Okay. Goldman, they're already in the process. Goldman model, they're already in the process of shorting. McElliott, right? He posted a note recently. He has his model. They still haven't even done that yet, right? Here's that spot I just showed you, that sweet spot low. Okay, here's the squeeze and what they needed to do by adding exposure. Okay, they haven't even started the process of adding shorts back on. So that's still to come as the market remains flat or starts to sell off. And did I post? I think I posted Bova's too. Just, oh, yeah. And this was Bova's note recently. Okay. Just basically reiterating that the equity index shorts positions are starting to grow. And as they're here, model CTA, SPX, NASDAQ, and Russell shorts accelerating in size. Okay, model recently reinitiated short positions in the index futures, and in the coming week, the allocations are likely to increase, especially if the markets start to sell off. All right, so before I even go on, makes sense? You guys, I know like the lingo here, especially you start to read McElliott, you could really have smoke come out of your ears. But anyone not follow what, again, I'm trying to keep it as simple as possible. That's the way I like it. without getting into too much detail of behind the scenes shit. But everyone follows the premise here, right? Here is financial conditions, okay? You hear out of the Fed minutes, the biggest takeaway, I mean, for me anyway, and for some of the people I follow, there was actual mention of how they're paying attention to the market because it's affecting financial conditions. Like when Powell was asked that in prior Fed meetings, he kind of like bobbed and weaved around the question. Yeah, we don't pay attention to the market too much in regards to that, but we don't want financial conditions to loosen up. There was talk coming out of the Fed minutes of how the Fed grows concern about the undoing of their work because of risk markets, because the market's not believing them, basically, in simple English. Okay, so this is the financial conditions that they're talking about. All right, and what's happened from that October low, all this Fed work tightening has been undone. Okay, just like we were looking at on the credit default swaps, very similar. Okay, so what the Fed wants to see is for this to stop, right? And to start heading higher and at the least sit in tight territory, right? You heard what's his face talk about that today, one of the Fed speakers. They want to sit in restricted territory. They want to keep conditions tight. That's how they're going to take down inflation. Okay, so they need this to tighten up, right? And the reason I'm bringing this up with all the positioning stuff, it's basically, if you see, it all moves together, right? Think of it as here, hedge funds cover their shorts, CTAs cover their shorts, right? They need to add that short exposure back on as the market sits or goes lower. Same thing with financial conditions, okay? As financial conditions tighten up, it weighs on risk assets, which includes equities. Okay. One thing, like if you can avoid one thing in life in this game, right, is to hold long into this stuff, right? Because you have no shot of making money on the upside when this is happening. No shot. Right? So it's almost like best case scenario, you're hoping for whatever you're holding to hold its own, in a sense. That's not a position you want to be in this game at any point. You agree? That's why you try as traders, right? And we're not investors. As traders, you want to try to sidestep this tightening process and get in the professional side shorting, right? Supply being added to the market. You want to try to sidestep that as much as possible to have a better shot at making money on the long side. All right, so that's pretty much the positioning and the the financial conditions perspective. I got a good chart. We spoke about it the last couple of weeks. I found it. I'm sure you saw it. I posted it on regular Twitter. I think, Mark, if you're out there, you've been asking for it. I think it was you. Here she is. Okay. This is what we're up against, in my opinion. This is what we're battling. Right. Or maybe it was you, Eric. Maybe it was you. This is what we're battling here. Okay? What we're battling is an influx of money that came into U.S. equities in 2021. Okay? So this is North America, basically U.S. and Canada. The bulk of it's U.S., obviously, combined. All right. And this is where we are. And if you remember the point I was trying to make to you guys, okay, if you look back here, like people think this is normal, right? This is not normal, okay? And every time you've seen something to the effect where a lot of money came into the market, there was a correction that took out that money, and you would see the indexes V-shaped rally to new highs and continue the bull market. Bull markets usually come to an end when you see 1/4 of this. Forget about this whole thing. Okay? This is insanity. Okay? And what usually happens in bear markets, right? Because when you don't have this, when this is not involved, as we discussed, you usually just have corrections, which last 2 to 3, 4 months tops, shakes everybody out, boom, you're right back on the horse, bull market, away we go. Okay? It basically, you only have to withstand corrections, and that's why you buy the dip. All right? That's where the buy the dip mantra comes from. When at the end of bull markets, this usually leads to bear markets. Okay? And bear markets, normally based off history, don't come to an end until a good portion of this comes out. It's really off the radar, And look, just look around us, right, Eric? Like if we look at this chart and it looks crazy, but look at what went on, Eric. Look at, like, just go on Twitter and rewind and basically just think back of what you were reading and hearing and seeing as far as the speculation and everything that came with it, from SPACs to NFTs to Bitcoin to Kathy. It went on and on and on. There were so many different things that were attracting speculative money. You know, this is considered a flight to safety compared to that crap. You know what I mean? A flight to safety. So this came in, basically, it came in from the bulk of it from the second half of 2021 all the way, and it carried into this year. Not a lot, but there was inflows, not outflows this year. The bulk of it was second half of 2021, basically. McBob, you took the words out of my mouth. ARK still has inflows. Okay? You can't believe this. How about ARK, which has burned your money, okay, still seeing money come in? Okay? You people sitting through this, and you know they didn't get in at the start of this rally back prior to COVID. You know the start of the buying came into this. You know for a fact, right? Off of COVID, all the retail money came in off of this, okay? And they sat through all this pain, and to this day, I think I just read on Seeking Alpha, I think it was like 150 billion of inflows. Okay, 150 billion of inflows off of this. That's not what you see at the end of bear markets. Okay, a bear market is normally a cleansing, right? All that speculation, all that behavior, that gambling, degenerate gambling mentality behavior that you witness, it's washed away. Okay, the elites of the world, the Fed, they want no part of that. If they can let that continue, you're going to have, like we were talking about, you're going to have 100 Sam Bankman-Frieds, right? If they let it continue. Yeah, exactly. Tesla, well, listen, and you know what? Including myself at times, what people don't realize, there's a lot of money to be made in bubbles. But the problem is, for a lot of folks, they don't care. The market trains them to never cash in their tickets. After I went through the 2000 bubble, okay, I said to myself, this will never happen again. Never again. After what happened in 2000, There will never, in 2000, they held those internet tech companies all the way down. I kid you not. We went over it. There wasn't capitulation for a year and a half, 2 years into that bear market. And there were multiple periods of capitulation. They literally believed in those tech names so much, they held them to nothing. They averaged all the way down. And why? Because every correction and dip throughout the mid-90s, late 90s, if you bought any pullback, you got rich, right? So you were taught to just sit through the pullbacks. Don't sell. Diamond hands, huddle. Okay? That terminology wasn't around in the late 90s, but that was the mentality. And now, when again, you're talking about a lot of people who are holding bags weren't around in 2000. A lot of people who were around in 2000 learned a lesson more than likely and would never do that. Yeah, exactly. You were taught, listen, if I can just wait it out, T, if you have time on your side, you'll be okay and you'll make money. They didn't realize that, yeah, that if you have enough time, that's in regards to the overall market, okay? What people fail to realize is you see it already. You see how names are coming out of the indexes left and right? They're taking names out, putting new names in. You're going to continue to see that. That's ultimately what helps these markets bottom and turn. If they left the same names in the NASDAQ will probably still be at 1,500. Yeah. I believe it. You know what I mean? It's the market does an unbelievable job. The market and the noise around it of manipulating people into doing just that. You know what I mean? Holding those bags until they bury them alive. And that's when you start to see this come off. As people start to lose jobs, the unemployment rate and the economy start to deteriorate, and things things just don't come back. You'll have these guys start to throw in the towel and give up. And guess what? Like I told you, they won't be back for a long time. That's the barrel of gold at the end of the rainbow. That's what you try to stick around and wait for. Because when they come out and you have this period when they don't come back, that's where you buy the dips. That's where you buy every correction, right? You buy the leaders of that bull market and buy them off pullbacks and corrections, and they V-shape and go to new highs. It's that wall of worry. And then, who knows, I might be dead by the time that comes around again. But the end of the next bull market, likely going to get something this. And Eric, it wouldn't shock me if the next one's even bigger, right? That's usually how it goes. Whether it's internet stocks, whether it's tulips before I was even born, it's just, same story, different shit. Yep, you're right, McBob. You're right. That's what happens. The institutions have the liquidity to sell into. Yeah, WWE buyout rumors, I think I heard right before I came on here, Damien. Plans to return. Oh, that's the news? I thought it was a buyout, I heard. All right, but that, again, that's that's what I'm telling you guys to stick around here for, okay? And avoid beating yourself up trying to time the Tesla low, right? Or trying to get in the middle or at the start of a downdraft just because you're bored and you see some stocks going up or the index bounces one day and you need to get aggressive. Chris Katie. I keep saying Chris Katie, I give him credit because at the start of this bear market, I really, just from the fever pitch behind crypto, NFT, and all that. I couldn't get over how much money was going into that stuff. I really thought it was a bigger risk than we're seeing right now. And in reality, Katie was right. It really didn't have any impact on anything else so far. I thought, I don't know if I would call it systemic, but I thought just the wealth effect of people being buried alive in all that crypto shit, I thought it would really look a lot uglier as a whole than it is now. You know, but Katie had a good point, right? When he made that argument, he said, listen, 2000 was the same thing as far as tech is concerned, and look what happened. It wasn't 2008 back in 2000, wasn't anything systemic. You had major tech companies go up in flames, and it just was a bear market that lasted 3 years. It was excruciating pain, but you know, and honestly, I don't even think the recession, if I'm not mistaken, I think prior to 9/11, I don't think it was any major recession or anything. You know, and then you had 9/11 and everything else that came along with it. But it played out a lot of similarities, guys, up to this point, from the 2000 bear market, if you guys have been through it, I know some of you have, to this one. A lot of similarities, a lot. You know, to this point, this is nowhere, this is not 2008. Okay. It can get a lot uglier than what we're seeing. Like I said, you know, 2000, for whatever reason, you had some exogenous events to follow, 9/11 being one of them. You know what I mean? So who knows what's going to happen over the next year or two. Yeah. Well, I mean, again, I don't know enough about crypto, you know, to even, I don't even know enough of it, put it that way. So I can't even, I can't even argue that fact, you know? But I'm just saying, again, the speculation, and like, I don't even know how the words to explain it, the fever pitch behind it. Like, you know, if you badmouth crypto, you'd get beat up. You know what I mean? Like it was, right? The devotion and the belief behind it, you know what I mean, was almost like a cult. Almost like a cult. You know, and just the ape gang and all that stuff. I never seen anything like it. You know, the tech bubble, the internet stocks, you know, you didn't have some monkey gang who joined up and just keep buying, hold on. They're still doing it. I see them all over Twitter. I don't know why they're in my timeline. I don't even follow these people. They're all over my timeline. They got these ape emojis, and that's all they talk about is AMC and GameStop. Who's holding? Who's holding? That's what, like, they're still talking about that every day. They bought the dream, is right, McBob. It's hard to believe. It's hard to believe. You know, it shows you getting attached to anything in this game can be extremely painful. You know, extremely painful. But again, I don't want to get you guys always get me into the Bitcoin ape rip, them get me to rip on them. You know, point being is this was much needed and was going to happen, whether it happened when it happened in the start of 2022 or it happened in the middle or end of 22, it was coming. When you see all that, you're closer to the end than anything else, right? Just think of it logically. That's what, when I have family members come over to me and ask me if they could buy Bitcoin literally at the highs, right? They always ask at the highs, never at the lows, always at the highs, you know? And I said, just forget what I recommend. Just think logically. Everybody and their mother is saying to buy Bitcoin. Are you going to have everybody and their mother get filthy rich in the world? And I'm going to be the only one who doesn't make money in Bitcoin? You know what I mean? Is everyone going to be a multi-millionaire, billionaire, trillionaire? And I'm going to be the only one punching myself in the head for not buying Bitcoin? Life doesn't work that way, right? They would never allow that to happen, never. You had mopes, you see them, right? All the guys making money on Bitcoin, they made a shitload of money, right? I give credit to some of them, they cashed in their chips. But, you had guys, jabronis, making a lot of money doing nothing. Yeah, it's always, it's a pyramid scheme, right? You get in early, you promote it, you get more riffraff involved in it. Yeah, you're right. Like dork, smart, whatever you want to label them. Right, they were all in from dirt cheap, Damien. It's like a pyramid scheme. And I'm not saying, again, the technology is a whole different animal. The technology got nothing to do with what we're talking about. You know what I mean? We're talking about the market and the players in the market. It's got nothing to do with that technology, right? As people are going to realize with a lot of these good companies, Tesla, listen, Tesla is just as good as a company as it ever was, right? It was overvalued. Shorts got beat up trying to short it. And now you're going to have bulls who think, no way can Tesla go lower. You name it. Name a blue chip company from the 90s. I told you guys, name any one. And I've seen every single tech name, blue chip as you can possibly think of, be taken to their knees if they survive. Right? A guy on Twitter, I don't even know his name, like I would have mentioned it anyway. But it was like, guys, just hang in there. Okay, it wasn't easy to hold Amazon through the 2000 bubble, but if you did, you'd be worth so-and-so. Amazon went down to $5. It was just selling books on the internet. Nut job. You would have held that stock throughout that whole bear market. You know what I mean? That the one stock you're going to bring up, you were more likely to hold WorldCom or Cisco. Right? And WorldCom went under and Cisco was a dead heartbeat for 2 decades. So, don't listen to the crap. You know what I mean? Don't listen to the crap. This is what they feed themselves to make them feel better as they're losing money. We're trying to wait it out to the end of this. Like I told you, if we can make some money in the interim, trying to be smart about it, size down, like McBob, like you've been saying, right? You're just trading, sizing down, trying to keep yourself involved. Hopefully you make a little bit of money, right? By being smart. That's all you want to do until we get to the end of this. As long as it takes, it's worth it. It's definitely worth it. If you we're relying on this for an income, I got news for you. You got to get a job. You got to get a job right now. You got to get a job. You got to find, or, go into your nest egg if you have it. You can't rely on this game for X dollars right now to pay your bills, because you're going to blow up. Plain and simple. You may not want to hear it. You may hate me for hearing this, but you're more than likely going to blow up if you're relying on X dollars to pay your bills out of this game right now. Yeah, McBuck, that's because, listen, it's you and I, we've been in the game, so maybe it's easier, we've seen it before, but that's ultimately the goal, Like I said, you almost want to treat it like a DraftKings account, but be more disciplined and prudent about it. You understand? Very little edge, Max. Very little. If you can be as disciplined as possible, okay? If you can be as disciplined as possible, the only shot you have, okay, especially like on the swing side, if you got to hold overnight because you can't day trade for whatever reasons, you wait for these setups, okay? And it's not like these setups don't have risk, because when you do get that capitulation, this is likely going to break. That's how you get capitulation. You know what I mean? One of these is more than likely going to fail, without a doubt, in this bear market. Okay, that's where capitulation comes from. Okay, you get people here waiting for the bounce or playing for the bounce, and then all of a sudden you get that exogenous news, something breaks, and kill. Right? 9/11. How do you predict that? Right? You get 9/11, and you saw what that looked like. So, that's why no matter what, you do not want to get crazy here, and you want to survive. All right. But if you do what you need to do, if you manage your bankroll properly, in simple English, okay, the one time it fails is not going to bury you, right? Maybe you played it a couple times, and the one time you played it, you lost, and maybe you're flat out of the deal, or maybe you lost a little money. No big deal. You're still around. What happened? I put 2001 in, and it's still not going there. Oh, I know what I did here. What? Look what they did to me. I gotta. Oh, here. Okay. Look at this market. I just want to show you guys, so I drill it in your heads. When you think she can't hit the fan, and I'm not saying 9/11 has to happen here. You know what I mean? We could, for all I know, I kid you not, these lows, maybe we hang around these lows for a long, long time. Maybe we get capitulation from a higher level, and maybe we just breach the lows, and there's no waterfall selling. I have no idea. I have no idea. I don't know how players are going to react. If I did, I wouldn't be sitting here talking to you guys. Here's 9/11. Okay, so look at what happened here, right? Selling, 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 and that 9/11. And here's the best part. Not the best part, but how excruciating this bear market was. 9/11 wasn't the low. It led to a really nice rally. Okay, this was a really nice rally. Believe me, may not look like much because of that bear market, but it was a real nice rally. But look what followed. Okay, so even if you were around here thinking that was the low, look at this. But that was it. That was it. All right, and that looks vicious. And then look at the price action after that. Boom, spin it up. Guys, I promise you, here, I felt like I was the only one left in the game. Everybody I knew when I got into the business, I'm not even bullshitting you. You guys know I wouldn't bullshit you. Everybody I knew, every single person I knew was out of the market. Hung up the cleats. Goodbye. Everybody at that point. So this all happened here. Okay, and look at this. Double bottom test. Oh, look at this. One more. How about it? And then that was it. But nobody was asking, is this the bottom? Is this the bottom? Have we seen the lows? Is this the bottom? Is the Fed cutting? Should I get long? I'm still huddling. Nobody. You heard crickets here. Crickets. Nobody cared about stocks. It is, right? I mean, this is just painful to look at the chart. All right, but you heard crickets. You didn't hear mopes asking if it was the bottom. You didn't have people come on CNBC talking about this is the bottom. Right? But look here. I negged you out, right? Here's your motivation. You ready? Here's what follows. If you made it and you hung around, look at this rip off that 2003 low here. Okay? When I tell you, you could have thrown a dart at anything and made a fortune. Okay? You could have taken a dart and thrown it up against the board at anything with a ticker and made a fortune that survived this. Okay, rip. Small caps here, micro caps, you name it, flying. Okay, and then look, right? Climb the wall worry. Every time the market did something like this from that point, you had all the bears that you see on Twitter now. They're going to be doing the same thing. We're going back to new lows. This was just a bear market rally. And it never did, you know, throughout that bull market. All the way to 08. Look at this. Okay. Now, you look at what we're dealing with. This is 08. Oh, my God. Yeah. You look at what we're dealing with, and then look at 03 to 07. 4 years. 4 years. Okay? 4 years of a run like that, where every dip was buyable. So, but that's again, that's the goal, to get here, and it's easier said than done. Later, T. You know, easier said than done. And like I told you guys, the good thing, I know I've said it a lot, the good thing is that even while the market continues to sell here, okay, there's going to be stuff that holds up a lot better, like we're seeing now, and will already be in uptrends. You know what I mean? Like literally the whole entire small cap market was in a full-fledged bull market already by that point. So while this was doing this, you had small caps doing this, and then when this waterfall came, small caps did this. But they were still, you understand? They were still in a bull market. Honestly, if you're talking about, Luis, if you're talking about investing through those lenses, right? There's no way. Okay, if you're an investor, okay, the smart thing to do, all right, if you're an investor, like I'm saying, if you're like in mutual funds and stuff like that, if that's what you're worried about sitting through, you have to dollar cost average throughout your whole investment career. Okay, so anytime you do get bear markets, you want to add money to that investment pile. You understand? It knocks down your average, and over time, you know, you're going to forget about these bear markets over time. Okay, the problem is in individual names specifically, you can't take that approach because every bull market has new leaders. You understand? So over the length of time, you can't apply that same philosophy to, you know, every stock that did well in that prior bull market. You know, but here, Luis, this is why. Okay. You see this? Okay. This, if you invested over 20 years, okay, and you sat through, let's say, all of this, and you dollar cost average into weakness wherever it is, you continuously added to your investments over the long term, even with this pullback, right? It was worth the while. But that's the way you got to look at investing, you know, where you're putting away money and investing. You know, a lot of us, yeah, that's, and the thing is with like the index funds, like I told you, what happens with the index funds, we're seeing it now, they keep changing, they take out names continuously. Every bear market, they take out names that are disappointing, right? I don't even know what the criteria is anymore, but you know, every index, maybe it's different. And they put potentially new leaders in there. That's what you see. And ultimately that helps the market's bottom, right? The problem is if like a Cisco or one of those names that go sideways for 15, 20 years, if you just own that stock specifically, it doesn't help you at all. All right, so if you take out Microsoft before they got into software, what year was that? 2018-ish? It was dead money for a long period of time, Microsoft. Yeah, and well, that's another thing, right? If you're familiar with or take a course on option strategies, there's a way for individual names to write against positions and knock down your cost and protect yourself on the way down. But you got to learn about that. You know what I mean? You got to learn about that. You got to know what the hell you're doing with that. Oh, here it is, Microsoft. Why these charts? I guess it's on Zoom. It's so slow, so laggy. But anyway, look at this Microsoft mess, right? Like Microsoft, I remember a time, okay, where Microsoft, you laughed at somebody if they said, I'm buying Microsoft. Yeah, I better off go to a weekly. But there was a time where Microsoft did absolutely nothing, right? And you're like, oh, well, at least it didn't get killed. Oh, hold on, I think I lost signal. There we go. Oh my God, what happened here? Here, right? This shows you too. Look. Oh, it was Matt. Writing calls was one of the best strategies around last year. But again, listen, I'm being dead straight with you guys. Okay, I'm a street. There's no secret sauce for avoiding losing money if you're looking to hold during a bear market. Okay, there's no secrets. Eventually, the bear market bites everybody. Okay, you got people right now. You know what they're doing or have been doing? They're selling downside puts and collecting money, right? As long as the market bounces every time it makes a new low, they get paid. Easy money, right? The problem is, exactly, the one time it doesn't work, all that chump change you picked up along the way, poof, gone with the wind, right? Seriously. And, I'm being honest with you guys. I know it's probably, a lot of people, it's not the smart thing to say if you're trying to attract people to the market during a bear market, but there's no secret, right? You can't, buy quality. You heard that phrase, right? They were talking about Microsoft, Apple, right? That's what they were. There's no way to avoid it. The only way to avoid it is to get in cash. That's it. That's it. Get in cash. Bear market comes, you get in cash. That's the easiest way. Get into a high cash position, take a smaller amount to trade with, and try to wait it out. That's the only answer on it. That's the easy answer, anyway. The easy answer. Yeah, I mean, when you talk about preparation, there's nothing you can do about it if your plan is to hold through. Okay, there is a way to get out of the way of it, and let me tell you something. This bear market, compared to some of the others, it was almost one of the most easily telegraphed bear markets. And the reason I say that is everybody knew that the Fed was going to shut the spigots off, right? Everybody knew that inflation was coming into the picture, and the Fed would, even if they didn't have to go as aggressive as they have here, that they would have to tighten and run off some of that balance sheet, right? So more than likely, it was going to lead to a tougher time in the market. So it was avoidable. It was avoidable. And as the news continuously gets worse and as things deteriorate, again, I don't know, maybe I'm just saying it from experience. This is one of the few bear markets where I think, not the few, one of the easier bear markets where the FOMO hasn't really come into play too much. The FOMO hasn't come into play too much. Because, I guess maybe you think maybe because the Fed flat out told us they were going to rig the game. You think maybe that had something to do with it? The Fed told us that equities are going lower. They flat out told us that. Right? You had every riffraff and jabroni on the way up. Quote unquote, don't fight the Fed. That was everybody's like easy mantra on the way up. You know? And now, you got the Fed basically telling you they're going to rig the game. Again, nothing's easy. I hate to use the word easy in this game, but that's as easy as it's going to get to try to avoid some pain. The tough part, and I'm already thinking about it, okay? The tough part, usually for me, I've been getting better at it. COVID was a good test for me, but bear markets are even worse. The longer you stay defensive, and like me, I've been in, you guys know, in a high cash position with no swing position for a long time now. This is the longest I've ever been, right? I didn't get out at the start of this year. You guys know, I was out of this market at the end of the summer last year, right? Exactly, Eric. To turn it back on, not only to turn it back on, but to get aggressive like I should be. You understand? That's not going to be easy. I was thinking about this last weekend to myself. I swear to God, to the point where I'm saying to myself that I have to be more active now. Like McBob's saying, size down, but be more active. You understand? Play more. So I'm used to hitting those buy and sell buttons, and you understand? I'm in rhythm. Yeah, because what happens is your brain, right? For all this time this bear market goes on, you've been telling your brain that every time you go to hit that buy button is going to cost you money. That's what you're telling your brain through this. That's what I'm telling my brain. Every time I hit that buy button, it's likely to cost me money. So think about that. If this goes on for a long period of time, it becomes a habit, right? Yes, well said. And the best trades are always the ones that are the toughest to buy, right? Always. And that's what I told you. Like, see, COVID was a little easier because it was a crash and it was quick. But I remember, like, the discussion we had on the webinar, it was so difficult to buy off those COVID lows. It was so difficult, right? You had everybody walking around Manhattan looking like zombies. The whole global economy shut down. It didn't make sense for the market to go higher. So, but that was a short period of time. I'm telling you, for me, I know it already. I know it. I'm telling myself it, and I have to be aware of it, that the longer this goes on, it's going to be a problem for me to be as aggressive as I need to be when the time comes. I know it's going to be extremely difficult. So I'm seriously, I think one thing I need to do is be a little more active now, as crazy as that sounds, just to be ready. It may cost me a little bit of money, but it's worth it. It's worth it, It's worth it. So, but these are the things to think about, before the time comes. You know what I mean? What's up, Praveen? These are the things we need to think about before the time comes, because again, when the time comes, you just start to think about it. It's extremely, yeah, I've been playing solely intraday for a while. I think I had one swing position since like August of last year. I played Dada today. Yes. Did you play Dada? Dada was nice. Dada made my day today. Otherwise, without those Chinese stocks, I would have done nothing all day. Dada was nice. Look at this. And to be dead straight with you guys, I haven't, even if I forced myself to buy up until recently, I haven't had anything I was interested in. I'm being dead straight with you. This is the longest I've gone without even having much of an interest in any name. you know. But that's starting to turn now, as we've discussed, as these names are outperforming, now it's starting to make a little more sense to play even on the swing side, to take a shot on a name here and there, where before it didn't make any sense. I felt like it was 100, a lock to lose money. I felt it was a losing proposition. Penny EV name. No, Damien, that was today. I didn't see that. If it doesn't catch flow, then I don't see it. I'll tell you that much. Oh, wait. Do I know that one? ENVZ. Wait. ENVZ, you said? That's not a symbol. Oh, VX. ENVX. Let's see. Oh, no, this one. Yeah, I saw this one. Yeah, this was weird, though, because they were puts also that were tied to stock. Did you catch that? I wrote that. I'm going to ask around about this. I'm going to see what my buddy, maybe he knows what the hell's going on. From Trade Alert. Maybe he knows. Yeah, the July sweeps were decent, nice size, but there were puts there in the money puts that went off on the bid that opened. And they were tied to stocks. So, again, if there's any of the flow that confuses me a bit, I pass. You know what I mean? Batteries, what stocks are those? I'll tell you. And you guys know the EV names, I've hated them, and honestly, I still hate them. I that's one group I have no interest in. Oh, this is batteries? I didn't even know. Why did he get killed here? Earnings? What was this? See, the problem is, guys, the stories, right? The stories, forget it, right? We used to love to talk about the stories on these webinars, right? With the individual names. The stories don't make any money. Yeah, the stories are useless. The stories are useless. The stories are useless in a bear market like this. Useless. Useless. Yeah, fundamentals too. I mean, that's going to change. You're going to start seeing profitable companies that are growing profits. You're going to see that change. But you're right. Fundamental. You know why? And McBob, I give you credit. You've been saying this up to this point, okay? And this is one of the reasons why you can't get excited about stocks, okay? You know that with everything going on, it's going to have an impact on earnings, right? Earnings are coming down, right? And I'm talking about before we even start to see it play out. Now we're seeing it happen. But prior to this, there were going to be warnings. Analysts were going to take down estimates. All that was still to come. You have to see that at the least. You have to see that in any name you're interested in before you even think about buying it in a bear market. You can't buy ahead of a company taking down their numbers and analysts taking down their numbers. You know what I mean? That's stupidity. You can't buy ahead of that. So that's what's happening. A lot of people thought certain names wouldn't be affected. And they have pipe dreams. Everybody's affected. I mean, one, you have inflation, right? That was at the start of it. And two, we haven't even seen the impact of the most aggressive tightening cycle by central banks worldwide ever. Ever. You know what I mean? So, a lot of these stocks, and that's the problem, they get beaten up, and guys, it's tough. That's why you try to focus on new leaders when the tide turns. Trying to buy names that have been beaten up, it's a tough task, man. Tough task. Yeah, some of the defensive names have done extremely well. This thing doesn't go down. I mean, this is crazy. Crazy. And this is where the opportunities have been, right? Of recently. How about the gold miners we've been talking about, Praveen, right? Like already, they've been a decent trade already. These gold miners have looked incredible. Yeah, the Barrick Gold, even if you bought the ETF, even if you bought the ETF, WPM, that's another one that's called. All these names too, they've been buying those. It's probably a fund, like we were talking about, just buying putting on long-term exposure in these things. So basically what we're looking for here in the miners now, okay, and you could see, like even today, boop, dip, and they buy it right up. You want to see, like we were seeing in energy, they pull back and they get bought up. That's what you want to see. Yeah, just yesterday as well. McBob, honestly, there's been gold miner flow, I think, every day for probably a couple months now. No, Praveen, when would you say ballpark it started up with like that 2023 stuff? November. Yeah, so over time flies. You don't realize it. So here, right around here, they started buying that stuff. Yep. So these are the things we want to look for on dips now. You know what I mean? This stuff. All the other stuff is extremely difficult. Extremely difficult. Even like the China names, for the opportunity now, we want to see a pullback. You know what's funny? Look at this. They like Baba is a good example because it trades like that's the leader, right? You see this? You had people dropping dead all over the place from COVID. They reopened. Morgues, funeral homes, overflowing with bodies, debacle. And look what happened here. You see that? Nobody sold. No selling. And you had legitimate capitulation in here. Oh, that's another thing I wanted to show you guys. Okay? Because we were talking about it a couple months back. Capitulation, right? We've seen it overseas. We just haven't had it in the US markets. And look at this. This is basically like a Z-score while waiting. But look at this. You rarely see this. Money flowing everywhere else. Everywhere else. You rarely see this. I mean, our markets have outperformed for ages. Oh, somebody, look at this chart. Somebody, I think it was Bernstein. I retweeted it. Here it is. Okay. So this is how long it's been going on for. Ooh. And we're right here. Crazy, right? This is US from non-US. Yeah, Harnett. Oh, Harnett's note comes out tonight. That should be interesting. Back from vacay. But yeah, Harnett, hasn't changed his tune. You remember what he was saying, right? China, EEM, gold, again, all the non-crowded, out of favor stuff. You know what I mean? All the stuff that led in the prior bull market, you stay away from, and all the stuff that has been neglected, that's where you look for opportunities. Yes. Exactly. Because eventually, right, people will notice that that's where it's time to make money, and that's, be at a lot higher prices. But that's what we're going to look for. The opportunities are on dips, and the opportunities are when the market's highly correlated, meaning when you get, let's say tomorrow we sell off the job number and the sell-off lasts for a couple of days. China maybe comes down with it. The gold miners maybe sell off with it, right? That's where the opportunity is in these things. When everything comes down together with the market, right? That's where you want to look for where sweepers buying. Are they buying the dip in the miners? They're buying Asia stuff, EEM, FXI, that sort of thing. because that's where the opportunities are going to be. Exactly what took place in oil from last year all the way up until now. Yeah, that would be a huge plus, Eric. Do you think that happens? Do you think this thing rolls over? Honestly, I don't think it needs to even roll over. If it just consolidates, I think it'll be a tailwind. But if it rolls over, that's a huge tailwind. Huge. Huge tailwind. Yeah, that's a good call. You might, exactly. That's a good call. You might get like a lower high and then come back down. CTA, TD, yeah. They do a good job on the commodity stuff and the metals. They said bullish CTA positioning, right? For gold. Bullish setup. Also, the Goldman note, Praveen, I don't know if you caught it. One of their top metals trader is bullish gold. He laid out the scenarios. Basically, he thinks it's a win-win for gold, no matter how things play out this year with the Fed and all. See, that's it, McBob. That's the main risk, right? Is if something breaks, you're going to get a correction in all these things. If something breaks, that's the main risk. And like you're saying, that's probably the best entry for it, right? Yeah, I know. Well, it's outperforming. That's why. That's why maybe you wait for a shakeout, Siri. Now you wait for a shakeout. That's what you got to wait for. You got to wait for a shakeout. Like even the China stuff here, you just gotta, you gotta trade it quickly here at this point now. You got to wait for weakness. A lot of these things, you see some of the runs in these things, even the more speculative. Later, Omar, look at this. Crazy moves. Now, granted, all you got to do is scroll back and, it doesn't look like a whole lot. But yeah, these things have been buried for years. Yeah, I wouldn't be surprised you get a nice shakeout in China, and that's what I'm saying, Praveen, kind of like what McDob's saying. When you get the market come down and everything, you're going to get periods like that where everything is highly correlated to the index. That's where the opportunity is going to come from. You're going to get market down days where everything comes down together. That's so true, right? So true. Because you always had, it was like that catalyst. Banana vendors trading Chinese stocks in 2000. What do you mean banana? Oh, yeah. You're talking about that. Yeah. Yep. That's when it was, right? That's when things really started to heat up there. I told you guys, Eric, I don't know if you heard, a couple of my best trades in 2003, I don't know if you heard the story, you won't believe it, were Chinese internet stocks in 2003. NetEase, Sina, Sohu. I remember I bought those things, they were all under $10. Yeah, all the internet names. Crazy. Baidu, this is when they first started to get noticed, Remember Baidu? Baidu was a monster back in the day. A monster. Baidu was like Google. Yeah, blue chip, exactly. But that all, they all gave birth out of that 2003, that bottom and rally. A lot of those names. So, but listen, knock on wood, we got some stuff to play. Okay, we don't have to fall in love with any of this stuff. If we do, we want to make sure it's off a pullback, right? You like the miners, you like these China names, let them come in, let them get shaken out, shake out some hot bar, come by me lately guys on there, and then and look for opportunities. But if you want to stay tactical until we see, more improving signs, there's a lot of stuff to just trade. You know what I mean? have a little fun. Basically you're gambling. Try to do it prudently at certain spots, and helps you get through this. Helps you get through this. But we got that. We need that gold at the end of the rainbow. That's what we're waiting for here. All right. Anybody have any other questions? The Goldman sentiment indicators didn't come out this week because of the holidays, the ones we usually look for, the ones you guys asked for. But if I see them, I'll post them on my regular Twitter too. Sharpies have trimmed. Let me show you what Sharpies look like. They haven't done anything basically. But this is what they look like. Where's the, here's a good look at it. So red line, Sharpies. This is hedge funds. They're still a little bit short futures. And this is the riffraff down here. We didn't even talk about them today. That's another one. They covered their whole short position, you know? So you want to see some of this stuff back off sides, you know, to have any confidence behind some tailwind, you know, in the indexes. WBD, yeah, that was, you know, again, I didn't hold any of it overnight, but that was a nice mover. You know what I mean? That was a nice mover. Again, for a bear market, we'll take this all day long. NVCR, that quarter sweep late, what is that thing? What is this, a drug stock? There was some buying that came in late into this huge gap up. Biotech. I tell you, Ani, I don't think Ani's on here. He's been trading the biotechs and he's been killing it. Just even trading them tactically. Some of these biotechs have had nice moves. Which one's that? Is that the one that we were looking at a long time ago? Let me see. Yeah. Oh my God. I remember when this was running. What the fuck is this? Oh my God. It's a hockey stick on steroids right there. Oh God. These stocks. What the hell made that do this, right? Yeah, like I never seen that in my life, Praveen. I've never seen a stock go from wherever it went to $2,600. I never seen that ever. No, not that easy, Max, right? When the Fed's not rigging the game in your favor. Yeah, the problem, again, the problem with these oil names is it's good, you know, you're going to rely on crude. But, you know, what these oil names don't have to get killed. You know, they don't have to get killed. I mean, still look, it's still, nothing's changed here. I mean, maybe the options have moved a little bit because of the weakness, but this still isn't consolidation here. But you know, they move together, you know, they move together. A lot of these oil names, I mean, look at crude. You know, the oil's tough, man. I don't know. I'm being, listen, and this is coming from somebody who missed the whole entire oil move. Okay, the whole entire thing. I'm being dead straight with you. But oil's tricky for me. You know why? Because it's almost like you rely on, and I know they've held better than the price of crude, but I just, you know, you rely on crude. And if there is a recession and a slowdown, I see the bull case, I see the bear case. It's tough. You know, it's tough. Yeah, like, and here's the main thing for me, right? Here's the problem. And we've been talking about this for a long time now, right? The place to be long energy names were when they were catching initial activity, right? All the way back when nobody wanted to own them. Okay? Yeah. So now, like, look at, you know, even on dips, look at this move here. You know, there's going to be some lengthy digestion. There's got to be. So I don't know. It's just a tough, I can't figure it out. I have no opinion. I have no opinion. You know, I like to, you guys know me, I like to play on this side here. When here, it's tough for me. It's tough for me. For even the flow, because, a lot of these names have already moved. A lot of the bulk of energy stocks have already been lit up with action. So it's not as clean. But, listen, this looks good to me. Looks fine to me. But if crude goes lower, can this go higher? You understand? And that's what I've been saying to you guys for a long time now. That's the question I ask myself every time I see an energy name catch action. Can this go higher without crude? I don't know. You understand? That's the same exact reason why I've been in cash for so long. Because the question I was asking myself with every name, okay, throughout this whole thing was, can this stock go higher if the market is going to go lower? And my answer to that question was no. So I couldn't get myself to buy any stock, I mean, that's just the way I look at it. Like when I start swing trading positions, okay, the answer to that question is basically, I have conviction that even if the market does nothing, this stock is going to outperform. Like that's when I start swing trading. Otherwise, you just play the market, right? Do you see my logic there, or am I nuts? Yeah, I just, if I need to rely on the market so heavily, I might as well just play the market. So that's like the outlook with crude. You know what I mean? But I really don't know. I know people who are uber bullish. Later, Robert. I know people who are uber bullish on crude. And I know people who are extremely bearish on crude. I think it's a tough cookie here. Tough cookie. By the way, speaking of Boeing, that's another one outperformed. Look at this guy. Yeah, Praveen, it's definitely a worry. It's definitely a worry, and that's an understatement. The start to see outflows. I think that's what's going to, what's weighing. It's kind of being front run in some of the bigger names, the larger names now. That's why you're seeing a lot of weakness here. They're kind of front running that. McBob, me too. That's exactly how I feel. Exactly how I feel. It wouldn't surprise me either or. That's exactly how I feel. It could, it could go to new highs, or it could be 40. It wouldn't shock me. I have no idea. Exactly. It's just tough now. It's tough. The money, listen, there easily could be another opportunity in these things, right? I mean, you're in consolidation. That's a start. But you know where the easy money was. The easy money has been made in it, right? Now, this could just be consolidation to the next leg higher. We could be in a super cycle, very possible. But these things are in consolidation now. There may be some time. Yeah, and again, I don't follow the commodities well enough to know that shit, So it's beyond my pay grade. Anyway. All right, ladies and gents. Always a pleasure. All right. We know what to look for. We know what we're waiting on. Okay. So whatever we need to do to get to that point, let's get some offsides, and then maybe we'll find a nice little window to find some nice long opportunities. In the meantime, just like McBob said, hit the nail on the head. Size down, trade, stay involved, don't get buried. All right, yeah, job number tomorrow. We'll see how that shakes out. But we'll have action regardless. Have a good night, everybody. I'll see you mañana.